Welcome to the deep dive. Today, we're plunging headfirst into a company that has executed, well, one of the most audacious, almost unbelievable pivots in recent market history. We're talking about SharpLink Gaming.
That's right.
Can a struggling micro-cap company really transform itself almost overnight into what it claims is the world's largest publicly traded holder of Ethereum? I mean, is this some visionary move to create the MicroStrategy of Ethereum, or is it just a desperate, high-stakes gamble?
A gamble destined perhaps to end in tears.
Exactly. By the end of this deep dive, you'll have a much clearer understanding of what's truly at play here.
Okay, so our comprehensive analysis today focuses on SharpLink Gaming, Inc. It trades on the NASDAQ Capital Market, ticker symbol SBET. And just so you know, all the data we'll be discussing is as of the market close on July 2, 2025. At that point, SBT's closing share price was $9.35.
Right. And to help you unpack this incredibly complex, really dynamic story, we've structured our deep dive into two distinct parts. In part one, we'll first unravel their new business, then we'll evaluate the management team behind this radical shift, and finally dissect their, well, completely transformed financials.
Okay.
After that, in part two, we'll explore market sentiment, examine the crucial ownership structure, conduct a thorough risk assessment, and ultimately synthesize all our findings into a clear conclusion. All right, let's jump straight into Chapter 1, Business Analysis, a tale of two companies. You know, to truly understand SharpLink Gaming today, in July 2025, you absolutely have to understand that it's really two fundamentally different companies occupying the same corporate shell.
It really is. It's a dramatic before and after story.
Definitely.
The before was, well, a traditional iGaming marketer. Their business model was pretty straightforward. Operating affiliate marketing websites, like sharepbetting.com, driving traffic to licensed sportsbook and casino partners. Revenue came mainly through performance-based fees. And critically, their sports game development business sold off in January 2024. And their C4 sports betting conversion tech, that was shut down in late 2023 due to, and this is their quote, lack of market acceptance.
Ouch.
Yeah. So this was a micro-cap company, frankly, with dwindling annual revenues, barely $3.66 million in 2024. Just not cutting it.
And here's where it gets really interesting. In a stunning pivot announced back in May 2025, SharpLink declared a completely new corporate strategy, their goal, to become the world's largest publicly traded company to adopt Ethereum ETH as its primary treasury reserve asset. So while that legacy iGaming business still technically exists, it's now absolutely secondary. It's almost like they went from, I don't know, selling horse-drawn carriages to launching rockets overnight.
That's a good analogy.
Yeah.
Indeed. The new business model has two main parts. First, they aim to acquire and hold large quantities of Ethereum directly on their balance sheet. This gives public investors a pretty straightforward liquid proxy for ETH. And second, they generate yield by actively staking 100% of their ETH holdings. So they earn additional ETH as a reward for participating in the network. As of late June 2025, their holdings stood at an impressive 198,167 ETH.
Wow. So their primary product essentially becomes their own stock, right?
Pretty much.
Which they market as a direct vehicle for exposure to this large, professionally managed, actively staked Ethereum treasury. And they've also stated a long-term goal of maybe leveraging this unique position in Web3 infrastructure to potentially build new solutions within iGaming, trying to bridge those old and new worlds, I suppose.
Exactly. They're hinting at that connection.
Yeah.
This pivot has truly catapulted SharpLink from, well, obscurity to a very unique position. Its market cap was previously negligible. Now, it's defined almost entirely by its holding of nearly 200,000 ETH, which makes it, by its own accounts, the largest publicly traded holder of Ethereum in the world.
So their value proposition to investors is completely rewritten. It's now about providing you, the investor, with meaningful economic exposure to ETH through a regular NASDAQ-listed stock. And this is built on three pillars as they frame it. First, there's the direct exposure, a simple way to get a proxy for ETH without needing a crypto wallet or anything.
Right.
Second, there's the expertise, with the strategy led by, well, a pretty big name, Ethereum co-founder Joseph Lubin.
That's huge.
And then there's the active yield. So staking isn't just holding ETH, it's actively participating in the network to earn more ETH. Does this create a unique compounding effect that maybe a simple Bitcoin treasury wouldn't have?
Absolutely. That active yield from staking is a critical differentiator. It creates a potential flywheel, as they call it, for compounding value, It's quite different from a passive Bitcoin treasury.
How so?
Well, when you stake, you're not just hoping for the price to go up, you're also generating an income stream in ETH itself, which can then be reinvested, potentially accelerating growth much faster.
Okay, that makes sense.
So this means SharpLink operates at the intersection of two distinct industries now. There's the iGaming industry, which, still sees robust growth, but it's no longer the primary driver for them. And then there's the more relevant and emerging field of corporate crypto treasuries.
Right, like MicroStrategy pioneered with Bitcoin.
Exactly. That's where companies add digital assets like Bitcoin or Ethereum to their balance sheets as reserve assets. SharpLink's key distinction, again, is being the first and so far largest company to go all in on an Ethereum-based treasury strategy.
And that completely changes who they're up against, doesn't it?
Oh, completely.
Their old iGaming competitors are largely irrelevant now. Their true competitors are, what, other vehicles offering ETH exposure?
That's right. You've got maybe corporate treasury proxies like MicroStrategy for Bitcoin, although that's a different asset. You've got other companies trying to pivot into ETH staking, like maybe Bit Digital. And significantly, the recently approved and launched spot Ethereum ETFs. Those are a big factor now.
Ah, the ETFs. That's a key point.
It is. And it leads into the regulatory side. SharpLink now faces a dual regulatory burden, but honestly, the crypto-focused risks vastly outweigh the legacy iGaming ones. I mean, the iGaming side requires licenses in 18 jurisdictions, which is complex, but manageable.
But the crypto side.
The cryptocurrency regulatory environment in the U.S. is the single greatest external risk and source of uncertainty, full stop.
Even with the recent shifts?
Well, yes, a shift in presidential administration in 2025 has led to a, let's say, more crypto-friendly posture, and there's an SEC task force exploring clearer rules.
Right.
But significant ambiguity remains, particularly around whether ETH could eventually be deemed a security, and critically, the regulatory treatment of staking itself. That's the big unknown.
Right. So the barriers to entry for this new business seem formidable and quite unique. I mean, theoretically, any public company could just go out and buy ETH, couldn't they?
They could, theoretically.
But the true barrier SharpLink has erected, this social moat, as some call it, seems less about a financial hurdle and more about maybe a trust-based barrier in a space that's often, skeptical.
That's precisely the insight. Yes, anyone could buy ETH, but the real barrier is the credibility, the network, and the capital provided by Joseph Lubin and the consensus-led consortium.
That backing matters.
It matters hugely. The ability to raise $425 million in a private placement from top crypto VCs like Parify, Pantera Capital, and Galaxy Digital, that is not easily replicated by just any company popping up. This backing provides that powerful social moat because it signals legitimacy and deep alignment within the crypto community itself, which is crucial in a market that really prioritizes trust.
So the old SharpLink Gaming brand isn't the asset.
Not really. The company's true brand asset is its new identity. The world's largest publicly traded ETH holder, and maybe the MicroStrategy of Ethereum. That's powerful first-mover branding, and its sheer scale, being the largest public holder of ETH, creates a first-mover advantage that can attract more investor capital and potentially secure more favorable terms within the crypto ecosystem.
And that network effect, built by its leadership and backers, sounds like our most powerful competitive advantage.
I think it is. Joseph Lubin's involvement through Consensus brings the entire Consensus ecosystem. You're talking foundational Ethereum products like MetaMask, deep developer relationships, connections to virtually every major project in the space. That network attracted those high-profile crypto VCs, forming a consortium that provides, frankly, unparalleled expertise and resources.
Okay, so that gives us a clear picture of what SharpLink is now. But who are the architects behind this incredible transformation, and how has their leadership shaped this pivot? Let's turn our attention to Chapter 2, Management Evaluation. The Lubin Effect.
Right. The leadership team is indeed a fascinating curated mix. You've got traditional public market experience blended with deep crypto-native expertise. Joseph Lubin, appointed chairman of the board in May 2025, is unequivocally the strategic architect. He's the company's most important asset, really.
Ethereum co-founder, founder of Consensus.
Exactly.
Yeah.
His credibility is the absolute cornerstone. And his crisis response capabilities, we saw them immediately in June 2025. He swiftly and forcefully clarified a misinterpreted S3 filing on social media, stabilized the stock after a massive panic crash.
Yeah.
Showed real leadership there.
Wow. It sounds like investing in SharpLink has been a wild ride, like trying to surf a tsunami. How does management even begin to communicate stability to investors in such an environment?
It's challenging.
And what about the existing team? Rob Fithian, SharpLink's founder, he's been CEO since 2019. What's his role now?
His role seems to have evolved. He's managing that legacy affiliate marketing business, ensuring they stay compliant with NASDAQ listing rules, and importantly, collaborating closely with Lubin.
Okay. And the CFO?
Robert DeLucia, CFO since August 2022. He's a CPA with extensive experience in financial leadership. That's critical for navigating the novel accounting implications of holding and staking such a massive crypto portfolio under the new FASB rules. It's uncharted territory for public company accounting.
So how have they been communicating this massive shift?
Their communication strategy has been, I'd say, remarkably open since the pivot. They've issued detailed press releases for each major ETH purchase number of coins, total cost, average price. Very transparent.
It's good.
And to enhance transparency further, management even introduced a new metric called ETH concentration, designed to show the per-share asset value. Plus, hiring Elevate IR signals a commitment to professional communication with the market.
Okay. And their capital allocation strategy sounds like it did a complete 180?
Oh, a complete 180-degree turn is exactly right. In the past, it was all about divestment and consolidation. Remember, selling business units for $22.5 million in January 2024, just to streamline. Now, the core business is the ETH treasury. And 100% of the significant capital raised that $425 million PIPE.
That's the private investment in public equity, right? Selling shares directly to big investors.
Exactly. That PIPE deal plus proceeds from an ongoing $1 billion at the market facility, which lets them sell new shares directly into the market over time. All of that cash is being allocated solely to acquiring more ETH.
So the exact opposite of share buybacks.
The polar opposite. They are aggressively issuing new shares through that PIPE in the ATM facility. And that, of course, creates significant dilution for existing shareholders. That's the trade-off.
And dividend.
The company does not pay a dividend and has absolutely no plans to. All capital is reinvested into its treasury asset into ETH.
So for SharpLink Gaming, traditional metrics like return on invested capital, ROIC, are basically historical artifacts now.
Pretty much, yeah. Its historical ROIC was deeply negative, like negative 152%, reflecting how unprofitable the legacy business was. Going forward, the true measure of return isn't ROIC. It's going to be a combination of the price appreciation of its ETH holdings plus the yield generated from staking those holdings.
Weighed against that ongoing cost of capital from shareholder dilution.
Precisely. That's the new equation.
Okay, the new leadership sounds impressive, the strategy is bold, but what does this monumental shift actually look like on paper? How do we read these completely redefined financial statements?
Right. That brings us to Chapter 3, Financial Analysis, reading the new balance sheet. And what's fascinating here is how the financial statements of SharpLink Gaming really tell the story of two completely different enterprises.
They absolutely do. The historical data, it paints a picture of a struggling tech company.
Family struggling.
But the current financial reality after these massive capital infusions and ETH purchases is that of a specialized financial holding company. It's night and day.
Look at the numbers. Total assets went from a tiny $2.78 million in Q1 2025 to over $500 million post-pivot.
Wow.
Their ETH holdings went from 0 units to 198,167 units, valued at roughly $495 million at the time of analysis.
And the shares.
Shares outstanding jumped from about 660,000 post-split to over 62.13 million. That's the dilution effect.
Right.
And the market capitalization is now approximately $577 million. A monumental increase from its pre-pivot status, where some sources pegged it as low as like $6.5 million.
Incredible jump. So the legacy business revenue that justified the pivot.
Oh, clearly. For fiscal year 2024, revenue was just $3.66 million, a sharp decrease from 2023. Q1 2025 saw a further 24% decline year over year. Going forward, the company's top-line revenue will be this volatile mix, completely dwarfed by the new accounting standards for crypto assets.
Explain that again, the new accounting rule.
Sure. Under the new FASB rules, specifically ASU 2023-08, companies holding crypto assets like ETH have to mark them to their fair market value each quarter. And critically, the changes in that fair value flow directly through net income.
So if ETH goes up, they report higher income, even if they didn't sell.
Exactly. And if ETH goes down, they report lower income or losses. It makes reported earnings incredibly sensitive to the asset's price swings.
Okay. So for an investor, this means throwing out traditional PE ratios entirely, right? It's not about operational profit anymore. It's about balance sheet shifts reflected in the income statement.
That's a great way to put it. It's a fundamental change. How easy or hard this makes it for investors?
Yeah.
Well, it requires a different mindset.
Right.
And looking back, the historical profitability metrics of the legacy business were, frankly, terrible. Gross margin around 22%, operating margin negative 117%, net margin negative 93%. Just bleeding money.
Yeah, those are bad.
Those figures are now, as you said, historical artifacts. The company's future profitability will be almost entirely a function of Ethereum's price movement.
So under these new accounting rules, a small move in ETH price could mean huge swings in reported income.
Huge swings. A change of just $100 in the price of ETH could translate to a nearly $20 million swing in SharpLink's reported pre-tax income, given their holdings. It completely redefines what profitability means for this company on a quarterly basis.
Okay. And cash flow. Historically, they just burned cash.
Consistently burn cash, yeah. Negative free cash flow was the norm. But the new financial story introduces this new form of cash flow, the ETH generated from staking rewards. Since launching the strategy on June 2nd, 2025, they already earned 222 ETH in staking rewards. That's tangible income in the form of more ETH.
Interesting. What about financial stability? Debt?
From a stability perspective, SharpLink's balance sheet is exceptionally clean right now. It has a debt-to-equity ratio of 0.00.
He's zeroed.
Zero debt. The pivot was financed entirely with equity through that PIPE deal and the ATM offerings. Their short-term liquidity is also very strong, with a current ratio of 3.27.
And no dividend, as you mentioned.
Correct, no dividend.
Okay, so valuation. Standard metrics like price to earnings are, as we said, useless. Price of sales is astronomical, like 173. These are irrelevant now.
Entirely irrelevant. SharpLink is now effectively a holding company for a financial asset. The only relevant relative valuation metric is perhaps the price-to-book PB ratio. It was reported around 2.6, which interestingly compares to MicroStrategy's PB of around 3.3. So it suggests maybe a similar valuation ballpark, at least in terms of market premium over book value.
And a discounted cash flow analysis, forget it.
A DCF is simply the wrong tool for valuing SharpLink today. Its value no longer derives from predictable operational cash flows. I mean, you could do an educational DCF on the legacy business, but it would yield a negligible valuation, just confirming the market value is the new ETH strategy, not the old operations.
So how do you value it then?
The only logical way to assess SharpLink's intrinsic value is through a sum of the parts, SOTP, or more simply, a net asset value, NAV analysis.
Okay, walk us through that.
It's pretty straightforward. You add up the market value of its 198,167 ETH holdings. Let's say ETH is around $2,500. That's roughly $495 million. Then you add its cash on hand, maybe assign a small nominal value for the legacy iGaming business.
And subtract any minimal liabilities.
Exactly. This places the core net asset value somewhere in the range of $500 million to $520 million.
Okay, NAV around 520 million, but its market cap was $577 million.
Correct. With a market capitalization of approximately $577 million, the stock is currently trading at a premium of roughly 10–15% to the underlying value of its crypto holdings.
All right, that gives us a deep understanding of SharpLink's new business, its leadership, and that completely transformed financial structure. Now, let's consider how the broader market is reacting to this really dramatic shift. Let's delve into Chapter 4, Market Sentiment. What does the market's reaction tell us about investor confidence, or maybe lack thereof?
Well, for investors accustomed to traditional Wall Street research, SharpLink presents a unique challenge. There are currently no mainstream analyst price targets or consensus ratings available. Zero.
Really? No analysts covering it?
Not in the traditional sense, no. This information vacuum forces investors to rely heavily on alternative sources of analysis, social media chatter, and their own research. That makes things tricky.
And the news cycle surrounding SharpLink has been a primary driver of its extreme volatility, hasn't it? Creating a true roller coaster of market sentiment.
Absolutely. You had the hype phase in late May to early June 2025. That initial $425 million private placement led by Joseph Lubin sent the stock soaring over 400% in a single day. It was framed as the birth of the MicroStrategy of Ethereum.
Huge jump, but then
came the panic in mid-June. A standard S3 filing, which is just a registration statement, was misinterpreted by many as a massive insider sell-off. The stock plunged a staggering 73% in after-hours trading based on that misunderstanding.
Wow, 73%, that's brutal. How did management react?
Management, led by Chairman Joseph Lubin himself, moved really quickly to counter this misinformation. He went on social media, clarified that the filing was a standard, required procedure, not an insider dump. Since then, the media tone seems to have settled into a mix of, let's say, cautious optimism, combined with high-risk acknowledgement.
And what does that whole sequence tell you about the shareholder base?
It reveals a shareholder base highly sensitive to news, probably dominated by retail investors. It indicates a very emotional, maybe less experienced trading environment around the stock right now.
Okay. Looking at market indicators, what about short interest?
Short interest in SB is significant. It stood at 8.55% of the float as of early July 2025.
And for listeners, that significant short interest often signals a strong division in investor opinion, right? Some are betting heavily against it.
Exactly. It indicates a deep division in market opinion, and it also creates the technical conditions for a potential short squeeze if the stock were to move up unexpectedly, forcing shorts to cover.
What about technical levels? Where does the price stand?
As of July 2, 2025, the share price of $9.35 was trading significantly below its 50-day moving average, which was around $15.90.
Yeah.
That's generally considered a bearish technical signal for the short term.
But
However, the price was trading just above its 200-day moving average, which was around $9.14. This suggests that despite that violent pullback we saw, the long-term uptrend that began with the pivot announcement technically remains intact, albeit, tenuously. It's holding on.
okay, the market's reaction is clearly volatile and divided. But who are the key players owning the stock now that this seismic shift has occurred? What does that tell us about the company's future direction?
Next, we move to Chapter 5, ownership structure.
Right. And the ownership structure has undergone a truly seismic shift, mirroring its business pivot. It's fascinating. Traditional institutional asset managers, they've largely fled the stock. Firms like Value Base Ltd, Tealwood Asset Management, Virtue Financial, they completely liquidated their positions before the pivot was even announced. They saw the writing on the wall for the old business, perhaps.
So who are the new institutional owners? The new, and arguably more important, institutional owners are those crypto-native venture capital firms that participated in the May 2025 PIPE deal. We're talking Consensus itself, Parify Capital, Pantera Capital, and Galaxy Digital. These are the big names in crypto VC.
That's a very different kind of institution. And what about insiders, buying or selling?
This is really telling. The pattern of recent insider transactions provides one of the strongest bullish signals, in my opinion. On May 30th, 2025, coinciding with that PIPE deal closing, key insiders made significant coordinated purchases of SBI stock with their own money.
Like who?
Joseph Lubin himself acquired millions of shares and warrants as part of the deal structure. But beyond that, CEO Rob Fithian made a personal cash purchase of 44,640 shares for almost $300,000. And CFO Robert DeLucia purchased 7,440 shares for about $50,000 in cash.
Wow, putting their own cash in at that point.
Yes, substantial investments of personal capital executed at $6.72 per share. That signals powerful insider confidence in the new strategy. They bought in alongside the VCs.
So ownership is now concentrated.
Highly concentrated. A small, seemingly aligned group of crypto-native insiders and venture capital firms now holds a significant and influential stake. This concentration, especially with Joseph Lubin as chairman, pretty much ensures the company will remain firmly committed to its new Ethereum-focused strategy. It reduces uncertainty about them suddenly changing course again.
Okay, that makes sense. Every bold move, especially one this audacious, comes with a new set of risks and opportunities. Let's try and map those out. Now for Chapter 6, risk assessment. Let's use a SWOT analysis framework: strengths, weaknesses, opportunities, threats. What are the core strengths here?
Okay, strengths. First, SharpLink is the first and largest publicly traded company to adopt an ETH-centric treasury strategy. That gives it a unique market position, that first-mover status. Second, it boasts world-class leadership and backing from Ethereum co-founder Joseph Lubin and those top crypto VCs. That provides unparalleled credibility and network access to Lubin moat. Third, its strategy to stake 100% of its ETH holdings generates an active yield, creating that potential flywheel for compounding value we talked about. And finally, the company has an exceptionally clean balance sheet, funded entirely with equity, meaning no debt and strong liquidity currently.
Okay, those are compelling strengths. What about the weaknesses?
Well, first, the original affiliate marketing business, even though it's secondary, is still unprofitable with declining revenues. It acts as a minor cash drain, a distraction maybe.
Still hanging around?
Yeah. Second, the funding for this pivot came at a high cost. Massive shareholder dilution from issuing tens of millions of new shares. Early investors paid a price.
Definitely.
Third, the company faces extreme concentration risk. Its value is almost entirely dependent on the price performance of a single highly volatile asset, Ethereum.
All eggs in one basket.
Pretty much. And lastly, while the leadership has deep crypto expertise, the company itself has no real history of managing a large-scale corporate treasury or expensive staking operations. They're building these competencies in real time, essentially. There's execution risk there.
Okay, weakness is noted. Now the flip side, opportunities.
The most significant opportunity is undoubtedly a substantial and sustained bull market in Ethereum. As a leverage play on ETH, a rising ETH price would magnify positive effects on SBET's stock price.
Makes sense.
Also, growth in the broader Ethereum staking economy could lead to higher staking yields over time, boosting their returns. The company has also stated that long-term vision of leveraging its unique position to build innovative Web3-powered gaming experiences. If they pull that off, it could be huge, bridging the old and new.
A long shot maybe, but an opportunity.
A potential one, yes. And finally, if successful, SharpLink could become the default go-to vehicle for public market investors seeking exposure to the Ethereum ecosystem. That could attract significant capital inflows and potentially sustain a premium valuation.
Okay, lots of potential upside. But now the scary part, threats.
Right. Just as a bull market is its biggest opportunity, a prolonged bear market in cryptocurrencies would be, frankly, catastrophic for them.
Obvious, but critical.
But the single greatest external threat, I think, is regulatory crackdown. An unfavorable shift in the U.S. concerning crypto assets specifically, new rules classifying ETH as a security, or, crucially, restricting staking activities could fundamentally impair or even destroy SharpLink's entire business model.
That sounds existential.
It potentially is. Then there's competition, which is twofold. Other public companies could try to copy the ETH treasury model, eroding their first-mover advantage. And, as we mentioned, the proliferation of low-cost, physically backed spot ETH ETFs offers a simpler, perhaps more trusted alternative for many investors just seeking basic ETH exposure. That could eat into SBET's appeal.
Good point.
And finally, you can't ignore the inherent technological and security risks. Theft from hacks, smart contract vulnerabilities. These are always threats when dealing with large amounts of crypto assets.
What about broader economic factors?
SharpLink's stock is highly sensitive to macro factors. A high interest rate environment typically reduces liquidity and investor appetite for speculative assets like this. That's a major headwind.
And the opposite.
Conversely, a return to a low interest rate, maybe high inflation environment, could be a tailwind, as investors seek harder assets or yield. Specific geopolitical factors, like trade wars, don't directly impact them, but they contribute to broad market uncertainty, triggering risk-off sentiment globally, which would likely hurt a stock like SBA.
Okay, after diving into all this data, the business, the management, the financials, the market, the risks, the question that really stands out is this a stroke of genius or just a reckless gamble? How do we distill all these complex factors into a clear bull and bear case for SharpLink? Let's bring it all together in Chapter 7. Conclusion.
All right, let's start with the bull case. The argument here is that SharpLink offers a pure-play, leveraged bet on Ethereum. It effectively acts as a kind of leveraged ETF on the entire ETH ecosystem. It benefits immensely from the Lubin mode, that unparalleled competitive advantage in expertise, credibility, and network access, thanks to Chairman Joseph Lubin.
That seems key.
Very key. Then there's its active yield-generating treasury, achieved by staking 100% of its ETH. This creates that powerful compounding flywheel effect. By being the first and largest, it has a significant first-mover advantage, potentially becoming the default ETH proxy stock for public markets. And lastly, you have that deep insider conviction shown by the leadership team investing substantial personal capital alongside the VCs. That signals strong belief in the strategy's success.
Okay, that Lubin moat sounds incredibly powerful, but how does it truly protect them against, say, a major regulatory shift that targets staking directly? That seems outside even Lubin's direct influence, right?
That's a perfect transition to the bear case.
Okay.
The company faces extreme volatility and concentration risk. Its fate is tied almost entirely to a single notoriously volatile asset.
Right.
That can't be overstated.
Right.
There's been massive shareholder dilution to fund this pivot, a high cost borne by early investors. Then there's that overwhelming regulatory uncertainty in the U.S. crypto space, particularly concerns about ETH's classification or potential staking restrictions. This represents a genuine existential threat.
The biggest cloud hanging over it.
Absolutely. Plus, its failing legacy business, while small, continues to be a drag, a minor distraction, and cash user. And finally, the emergence of those spot Ethereum ETFs provides simpler, potentially lower-cost alternatives for basic ETH exposure. that could definitely erode SBET's premium over time.
So valuation revisited, DCF is out, NAV OTP is the way.
Correct. As we established, a traditional DCF model is inappropriate here. The only logical valuation framework is net asset value, NAV, or sum of the parts, SOTP. Our simplified NAV calculation, based on its 198,167 ETH holdings, valued around $2,500 per ETH at the time, plus cash and a nominal legacy value, placed the company's core NAV in the range of $500 million to $520 million.
Okay, and the market cap was around $577 million, leading to that 10-15% premium over the NAV.
Yes.
So this premium, it represents the market's valuation of those intangible assets, the Lubin expertise, the future staking yield potential, the liquidity of a public stock, future growth prospects. But how tangible are these intangible assets like expertise and future potential when the whole enterprise is riding on such a volatile asset like Ethereum? Is that premium sustainable, or is it just pure speculation at this point?
That is the multi-million-dollar question, isn't it? Here's the concluding outlook as we see it. As of July 2, 2025, SharpLink Gaming is, well, it's no longer really a gaming company in the traditional sense. It's a publicly traded special purpose vehicle designed for investing in the Ethereum ecosystem, architected and led by one of its original creators. The current share price of $9.35 reflects a market capitalization that is at a discernible, quantifiable premium to the underlying value of its substantial Ethereum holdings. The potential for reward here is undeniably significant if Ethereum performs well and they execute. But that potential reward is matched by immense and multifaceted risks: regulatory, market, execution, technological. Ultimately, whether that premium the market is currently assigning is justified will depend entirely on the future price trajectory of Ethereum and, crucially, management's ability to navigate the very volatile path ahead.
Wow, that was truly a deep dive into a fascinating and frankly audacious pivot. We hope you found this breakdown incredibly insightful. If you want more deep dives like this one, please remember to like and subscribe to the Stock Analytics AI YouTube channel. It really helps us out.
And just a reminder for you, our $4.99 on a month members get priority deep dives on tickers they request. We're actually covering all of the S&P 500 stocks over the next few months, and members get exclusive priority access to those analyses. And if you just want a one-off deep dive on a specific company, dropping us a super thanks on YouTube is the way to go.
And just for clarity, folks, this analysis was generated by an AI system. It's intended for educational purposes only and should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.